is for educational purposes only. All videos, presentations and writing are only for educational purposes and are not intended as investment advice. You can implement this while trading at your own risk. If you would like to learn and follow our videos, please subscribe.
Good day everyone, I'm Victor from Niger TradeWise. Hope we're all having a great weekend. Now last week our focus, we spoke about fundamental analysis and we picked a stock to use for that. Now that stock was Uber. Now we are going to go straight to the charts to further touch back on our technical analysis. So we discussed what fundamental analysis is basically things that affect the underlying price of a stock or currency. We spoke about it being on jobs, unemployment, elections, and pandemic, and now we have one, which is COVID-19. So we decided to take a position on Uber. Now, for those of you who didn't watch the previous video, please go back and watch it. It's called Uber. Where is it headed? So we looked at the charts. We first came to the weekly chart. That was the previous week. It was bullish, of course, but there was a resistance. Now this past week, as we can see, it's bearish. Bearish means it's going heading down. Now we could see that it had crossed the exponential moving average. Now it is obviously below the moving average on the weekly time frame. So we came to the daily time frame. We looked for resistance and we found one, and we got in at about 20. It was about here. It was about 28.5. Now, of course, it came down to close to about 21. Now, in this situation, we got our timing right. What's the next thing to do? What I advise you to do, we always say you don't risk more than 2%. So, and meaning that we don't risk more than 2%. Let's say we have an account of $10,000. 2% of that will be how much? That will be about $200. So, we're going to put no more than $200 at risk to sell Uber stock. Now after doing that, if we notice that okay, we risked $200 and we're already making past $500, we then move our stop loss from that risk of $200 and bank the $500 should in case the position should go back, or bank at least $400 should in case the position should go back, start heading back up. We'll be closed out of the position, but at least we close with some profits so that at least we have collected some money for that stock. Now, with that out of the way, we're still looking at the fundamental analysis and we're still in the pandemic period. I want us to look at another stock. Of course, it does not actually form an entry position, but it's actually showing us something, which is Pfizer. Pfizer is a pharmaceutical company. Now at this time, we are looking, and the whole world is looking at the pharmaceutical companies to provide a drug for this. Now, let's go to Pfizer. Now, as we can see here, this is Pfizer, the daily chart. Now, of course, 3 weeks ago it was heading down, and now it started the previous 2 weeks started going up, and it's going up. Of course, we can see it is heading for the exponential moving average. It has not crossed it, so we wait out. We still wait and observe. When it crosses it, we will then come to the daily chart and look for a good entry position, so that we can then buy the stock and hold it for a period of time. I hope this has been able to explain to you how to use fundamental analysis to support your technical analysis. I am Victor once again from Niger TradeWise. If you like to see more videos like this, please subscribe to our YouTube channel. And if you have any questions, please leave it down in the comment section below. You all have a great week ahead. Thank you. Goodbye.